Before the weekly analysis begins, I just want to let you know that I do have a Patreon page. We have two tiers available. The first tier is called Start Off for £15 a month, and what you will receive is access to a Discord server containing the beginners, intermediate, and advanced course, risk management course for Elliot Wave trading, as well as financial literacy content. This tier is also for those who want to learn at their own pace and generally just support what I do and just join a community of like-minded traders. The second tier that I have is called the Waveologist for £35 a month, and what you receive is everything that I mentioned above with the addition of specific chart requests for me to annotate on a daily and weekly time frame, and one-to-one support or group sessions depending on how many people have subscribed to this tier. The group or one-to-one sessions are for those people who want a little bit of extra help with their Elliot Wave education and also give the opportunity to ask me as many questions. Please do keep in mind that these are going to be 1 hour sessions depending on how many people have subscribed, and also I would say please do consider joining. It is really good value for money, and without further ado, let's get into the analysis. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome back, guys. This is going to be my Elliot Wave Count for pound, yen, pound, dollar, and gold. But first of all, any views or opinions or suggestions that are expressed in this video do not constitute to trading or financial advice. So let's get started here on pound dollar. Just bear with me a second. Let me just refresh my screen. Um, Pound dollar has been quite good with us so far. Um, I did say that once we did get in my previous video that 61.8 sort of level being hit, we start to see a downside, and we're currently coming into that downside. Now where we are currently in the market, I am assuming or under the assumption that we are still in this sort of wave W, which basically has been complete, and we've basically started this wave X, and what we're essentially doing is correcting to the downside for us to eventually give us maybe one more push to the upside to hit that sort of 1 to 1.236 extension. Um, so bear in mind that's the sort of long-term view. I am going to suggest that I am going to assume that we are going to actually continue going to the downside. In terms of smaller time frame, to me this seems like to me as a huge impulsive move. So this would be an A, B, and a C right here, and what we are currently is in this sort of corrective B wave. So ABC gives us a W, and we have an ABC into an X, and then we'll get one more push down into a Y. Um, the sort of targets that I'm looking for are probably going to be in and around the um, 50 to 61.8% level retracement of wave W, of wave Y. So in and around maybe around this area, we could possibly see some sort of rejection coming in to bring the market further to the upside. So that's pound with dollar. Here is gold. Gold has been very nice as well. It's given us a nice corrective wave 4. As we can see here, we have a wave 1, wave 2, then a 1, 2, 3, 4, then a 5. Then we have a deeper wave 4, A, B, and a C. And we've currently sort of moved into the upside to complete this fifth wave. Now, where am I seeing this market eventually head towards? Well, just by looking at the sort of movement that's been sort of left over, I did assume that we were going to actually continue going towards the downside once the 30% of this wave has been completed. But we decided to push even more further, and it has gone beyond the 50% level. So for me, I'm not necessarily going to be considered this to be a correction. I'm going to be considered this to be an impulsive move, but as a diagonal right here. So we have a wave 1, wave 2, wave 3, wave 4, then a wave 5. And what we're expecting is an A, B, C, or a corrective structure into a wave 2. So wave 1 is completed here, and we're getting that wave 2 to come in eventually, and then we'll then continue shooting off to the upside for that wave 3, wave 4, wave 5 to complete the fifth wave impulsive move to the upside. And then obviously once that fifth wave impulsive move is completed, we'll then get a deeper correction coming back down. Nevertheless, for this week, in terms of the short term, maybe for the beginning of this week, or maybe the first 2 days or something like that, could be less. We are going to expect some bearishness coming into the market, but a nice 50 to 61.8% retracement of this entire wave, with followed by a nice pattern confirmation, will be my ideal sort of entry to get involved in this market. And yeah, my stops will just be below this level right here. But yeah, man, I'm definitely looking forward for this gold trade, and yeah, we can see how it goes from there. Let's go on to pound yen. So here's pound yen. So pound yen obviously has done exactly what I said as well. Um, I did say last week in my video that this could essentially be that wave four of the bigger wave to then eventually come in to give us that sort of move to the upside. However, I am more convinced now that my previous analysis is more sort of lenient. It's leaning towards that than the previous forecast that I did. Um, but you know, we have a wave one here, a wave two, then we have a wave one, wave two, then a one, two, three, four, and where we are currently is in this fifth wave here, and that would essentially give us a wave one here, wave two, then a one, two, three, four, five, into a wave three, getting that wave four, then a wave five to complete the wave three. So ideally, in terms of the bigger degree, we are still currently in this wave three structure, and yeah, I don't necessarily. I'm necessarily gonna be. I'm not necessarily saying that we're gonna essentially start selling from here. But at the same time, I do feel as though we are definitely going to be heading towards the upside. I am probably going to say we are most likely inclined to go towards a 2.618% extension. Um, so maybe this could be the wave three, you can say. Um, or we could actually continue going to the 3.618 level. So we could get one more push up to the upside, followed by 4 5, and then we will get one more. I genuinely believe that we might essentially um, get the third wave to essentially just finish around the 2.618% level. We might get one more push up like that, coming to those highs essentially, come back down, go up one more time to test the 2.618, and then give us that wave 4 degree in the lower time frame, or sorry, in the higher time frame to come a bit more further down, to then finish off with one more push to the upside. So that's over the long term forecast of this. But all in all, I will probably say just be careful for this week or for the weeks to come. We are going to be sort of moving impulsively, but then it's going to be a hardcore, nice deeper correction. So, you don't want to be caught with your pants down. You know what I'm saying? Anyway, I hope you guys do like my analysis. I do have a Discord or a Patreon for those people that are interested in mentorship. You guys will have access to my private Discord, and please do like, comment, share, and subscribe. And I see you guys until the next one. Wassalamu alaikum warahmatullahi wabarakatuh.